So let me come back here to the stock chart here, and let me come here now. I'm looking at the S&P again. I'm going to pull up a 1-year chart. Now, 2011 was rough for us as trend or swing traders. It pretty much left us impotent, and we stayed in cash a lot. Because if you're looking at a 1-year chart, we use moving average to determine our trend. Here is this blue line right here is a 30-day moving average. You can see at the beginning of the year, we had a nice run up in price. And then around February, the market stalled out. And then from about February to July, kind of stayed in this little funky channel right here. And so it was back and forth. You know, we were in, we were out, we were losing money. You know, the market just wouldn't pick a direction. But then we got lucky here, and we had this large drop down here. And this was enough for us to make some decent money, kind of make up for this little stink area right here, what they call a channel. You know, then, you know, guess what? The market dropped from one channel and went right back into another channel. And so you can kind of see that here. And so it dropped into another channel. So we were stuck sitting on the sidelines again as trend traders. Now, we wear several hats as traders, trend traders, income traders, you know, long-term investors. So I'm mainly speaking of trend trading or swing trading. Then the market turned up again. We got excited, only to find out that the market trended right back into another channel. So 2011 was tough for trend or what they call swing traders. But income traders were able to make some decent money, because in times like this where the market is really not going anywhere and it's pretty predictable, staying within a range, you can use what they call income trades, or where you're selling time. Now, I had to think about it because this was a tough year for me, probably one of the toughest I've ever had since I started trading. And I had to think about it. I'm like, I don't ever remember the market trading in a range like this so much. I pulled up a 10-year chart, and you can do the same thing. Pull up a 10-year chart just to build up your own faith in the market, because sometimes you can kind of lose your faith. You have a rough year, you lose your faith and say, you know, maybe this trading stuff is not for me. Maybe I should go back to, you know, being a buy and hold investor and give my money to mutual funds. But I pulled up a 10-year chart and I kind of zoomed in and went over all the periods of the last 10 years. And no, there's been minor stack, you know, channeling, but nothing like it was last year. And so I had to take a step back and look at the bigger picture and say, you know what, this was just 1 year. You know, I have a skill for life. You know, I have to take the good with the bad. You know, back in what the internet, bull market, that market made tons of people millionaires. I mean, you could just literally pick any stock and you were making money. Okay. So as long as you're in a position, you have the skill and you're just waiting for that time, those times will come again. I'm absolutely positive about that. But in between those times, we may get some bad years. And I would say for trend trading, 2011 was a horrible year. We stayed in cash a lot. But as I said, we wear several hats. And so this year, I've got more questions about covered calls and income trades than I did in the last 2 years. Mainly, not even myself. You know, I dabble in covered calls, but I don't focus on it a whole lot because mainly I trend trade. But this last year, a lot of students and in the program, we had to even change our focus. Remember, times have changed. You must change with them. Even I had to change and had to change up how we even taught in the program to put more emphasis on covered calls and income trades. Still teach the trend trades for if the market trended again, we'd be ready. But mainly we spent most of the year focusing on covered calls and income trades. And so let me show you here. Let me do a 1-year chart again and show you what I'm talking about. So back here, it was up in February. I only have the last quarter's trades right now tracked on a spreadsheet. And so that was about from September. September is where this drop here where I said we were able to chance to make some good money. And so pull up a spreadsheet here. It has a spreadsheet of the last quarter of trades that students in the program or our graduate community either made or the last class that we had made. And so you can see, I won't be able to pull up the whole spreadsheet won't fit within this recording window, but I'll show you some of the stocks here. You can see the dates, entry dates starting in September. You come down September, October, followed to November. And then we have covered calls down here. Let me come over here so you can see the templates. So you can see the templates used. We have PR. That's a trending template. And the last time we used that was back in September. Well, remember here, the market dropped down and then went back into another channel. And so this was from about August to October, it stayed in this channel. And so as you can see here, we stopped doing the trending template. We went to income trades. Now, for covered calls, I like to make money on the front end by doing cash secured puts. So we started doing some cash secured puts, and the trades wind up working out so well in such a short amount of time. I decided, well, I don't want to take any shares. I'll just close out the trade early and take the cash. So the batch of income trades up here had a profit, including the losing ones. These ones, it doesn't always work out this well, but all of them wound up making a profit. You can come here again, see falling back in October, the market was still another channel. We had to adjust our hat, put on our income hat. We had to take off our trend trading hat and say, the market's stagnant. Let's focus on covered calls and income trades. And so we stuck with that. And so we made more income trades, vertical credit spreads, that batch there. Here's a strangle vertical credit spreads, some more vertical credit spreads. And here's some covered call trades here. We had an STMP and MDCO. Those were profitable. Let me see, make sure. Yep, those were profitable. 2% return on investment. The MDCO one wound up being an 8% return on investment. And covered calls, this was in a matter of a few weeks. We have, which one is this? I think this is SPY and EFA. We teach a ETF for life strategy. It's a strategy used to trade covered calls on the ETF. That one we're still in. That's why it's highlighted yellow. That's the closing price, the most recent closing price. So we're still in that. But all those are up for profit. We sold the cover calls here. The first batch, 2% return on investment, 1% for EFA, 2%, 1.2. And the great thing about this is like 2% in a matter of a few weeks. You know, where bank CDs and bank investment accounts aren't even getting this over a matter of years. But you can take your cash in your account and, you know, on a good year, earn 2 to 5%, conservatively, at least 2%. That's usually pretty easy. As long as you don't get all gun-ho and trade like it's in the Wild Wild West, just follow good risk management and be patient. You should be able to do that. But again, all things don't always work out great. Come here, I actually moved over the screen by accident. All right, let's see. These ones were losers. 2 covered call trades where we actually lost money. So we lost 3% and 1% on this batch, and that was it. And so you can see we started out trend trading because the market gave us a short window of trend trading only a few times this year, but it went stagnant on us. And so we couldn't trade our trending templates anymore. So we had to switch to something where we sell time, or we went and did income trades. So looking at what we had to go through, I want to let you know that in total full disclosure, I don't want to make it seem like, oh, it's just all easy. You're just like taking candy from a baby. 2011 wasn't just rough for buy and hold investors. It was also rough for us as option traders. As I said before, this was one of the roughest years I've traded in. I actually had to work for my money this year. I was getting agitated, getting really frustrated this year. The market wasn't doing what I wanted it to do. Of course, it does its own thing. But it was also rough for us. But we were still able to manage to eke out a profit just this last quarter alone. And so collectively, all those trades you just saw wound up being total profits, including losing trades, of about $16,669. Now, broken down on a quarterly basis, because they're tracked from about September, that equals about $5,556 a month. The reason I broke it down on a quarterly basis is because, at least in my experience, you know, a lot of people come to trading and they say, well, I want to make 10 to 20 grand a month. Yeah, that's the way I came to it. And it doesn't quite always work out like that, because trading is like working on commission. Some months is great. Some months are bad. Some months you come home, you want to kick the cat. Other months you come home, you're so excited, you want to make love to your significant other. You know, but at the end of the year, you tally everything up and you hope to God you made some money. And so it's kind of this up and down yo-yo effect. And so you break it down on a monthly basis to see how you did. And so, you know, when I first started, you know, like I said, I wanted to make like 10 to 20 grand a month. And so I would turn my nose up at covered calls or anything where I was making like 2% a month. And I would look at this $5,000 and say, nah, that's not good enough. I want to shoot for the fences. I want to hit home runs. Well, I was missing the bigger picture here. I was missing the obvious. And the obvious was this, that I lost sight of the fact that in times like we have right now, where the stock market gave everyone else a loss for the year, we were able to earn $5,556 a month because we're option traders. I was naive, you know, essentially, and I was missing the fact that that $5,000 could be used to pay for some of your monthly expenses. that $5,000 also could mean that the big difference between you working for corporate America the rest of your life or being able to quit your job in a few years. That $5,000 was made from a skill that you have for life and that you can use over and over again for the rest of your life. Nobody can take your knowledge away from you. You could go broke, but as long as you have a laptop and an internet connection, you could drop yourself anywhere in the world. You could take that skill that you have, rebuild back your account. Why do you think Donald Trump, who has been bankrupt several times, is able to regenerate his income again? Because he has the knowledge on how to do it all over again. And so I hope you understand by now, again, what I said in the beginning, you can't afford to sit on the sidelines and be a buy and hold investor anymore. So if you're on the fence about becoming an options trader, get off of the fence. If you tried option trading in the past and lost money, then figure out why you lost money and get back in the game. And one tip I can give you is, if you tried something, that's a hint. You don't try option trading. It's something you commit to. There are other reasons people lose money, but you have to diagnose and figure out why you lost money, correct it, and then get back in the game. And if you lost your faith in the stock market and you don't think you have the ability to earn a decent income, guess what? Get back your faith. And something I want to make really clear to you is that fear and failure go together, and faith and success go together. And something I learned from Joel Osteen, fear and faith both require you to believe in something you don't see. So why don't you believe in the thing that serves you? If you look at a successful person, I can almost promise you they had to have faith to get to where they're at. If you look at people who failed, they have tons of fear. Fear and failure go together. Faith and success go together. You know, the other two twins that go together, skepticism and failure go together, and optimism and success go together. Some people are skeptical. They try something a few times. Oh yeah, it reminds me of an email I received from one guy. He tried out a trading system. He lost money on this very first trade. He emailed me and said, "Oh, this crap doesn't work. I lost money. No thanks. I knew this was too good to be true." And I'm like, are you flipping kidding me? Come back and talk to me after you've made 100 trades and you've been doing this for at least 3 years. Then tell me it doesn't work. You can't try something once, fail, and then say it doesn't work. I'm not buying that. That's unacceptable to me. And on another point, if you're hard-headed like me and you're one of those people who sign up for courses and then don't follow what they teach, then you owe it to yourself to start over and do it right. You know, we all do it. We buy books, we don't read, we sign up for courses, we don't follow everything they teach to the T. I get emails from people all the time and they say, well, what's your advice? They're taking a different program, not mine. I say, look, the biggest thing I can give you is please follow their advice. If they tell you not to trade when the market's not trending, don't trade. If they tell you never to risk more than 2% of your account on a trade, then don't do it. Okay. Follow everything they teach to a T. That's the only way you can truly see if it works. But human nature, we skim trainings, we pick and choose what we want to follow. You know, we pull out a few things and then we try to follow it, but we don't follow everything to the T. And of all the programs I've ever joined, when I did everything they taught, even those goofy little goal exercises that I hated doing, when I follow every single thing they taught me to do, that's when I achieve massive results. So just stay encouraged, you know, and never settle for good enough, because good enough has never been good enough. There are opportunities out there for you to learn about investing, for you to make money, so you don't have to be a victim to the economy or a scrupulous money manager again. And remember, the quicker you learn and master the skill of trading, the quicker you can make money. Because I'll take our $16,669 in quarterly profits over the S&P's yearly loss of $14.29 any day and every day. And I suggest you do the same thing. You take care, and I'll talk to you soon.